Good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Monday, September the 30th, 2024. I am going to start on the NASDAQ futures, the NQ, and I'm starting on the 4-hour chart. Today, of course, big day. We now know what the roll is for the JP Morgan collar. And in the calls, it's at 60.20, and in the puts, it's at 54.25. And it's approximately 39,000 contracts. So good roll, nice. And the market actually did, but right before, I guess the roll took place, we saw a large sell come into the market and dropped off the low, and immediately then the roll was complete and they just started to buy the market back, and they didn't stop all the way through to the close, and then the additional hour as well. So we saw the markets move quickly back towards where I believe the new call walls are kind of coming in, particularly here in the NASDAQ. And what I did is I just did some conversions from the Qs over to an equivalent level in the NQ and equivalent level in the NDX. And now I'm just going to wait to see how accurate I am with those. But leave it safe to say that in the Qs, coming out of all of this, the call wall remains at 500. And so I believe that there are 40.01 or 1 zeros and some fractions units of the NQ to the QQQ price. So when I did the calculation there, it basically came out to 20,500. And that's right up where that high was that we had on the 26th, so last Thursday. And so 20,522 was that high. And I believe that's up in the area. So I think that the NASDAQ is on its way to either confirming or giving a quick test of the call wall above the market. So in terms of how I'm interpreting it, what I'm presenting right now is labeled out the side-by-side count, but this one is showing where minor 4 is complete and we're in 1, 2, and we finished minuet wave 1 of minute wave 3 here in the NASDAQ. And with that being the case, what the expectation would be is X1 is this 2, and then we're going to take a launch straight up. Now, one thing that I can add, and this would be on the 4-hour chart, is to just put in that particular fib if this is the case. I don't think that, I actually think that we may, if we get an intense, they keep buying once Globex reopens, and they keep buying when Asia opens, and they keep buying when Europe opens, and we end up back up towards 20,500 something, then it's going to be a pretty clear indication of which wave count is underway at that particular moment. Now, having said that, we're not out of the woods in terms of which one is it, this one or the other one that shows that this is an A wave and this could still be a B wave, because we still have to include the possibility that the markets could be moving up in an irregular B wave. We get a quick C wave down and then revert back again, moving into year end. So again, when I took a look at the seasonality charts, they necessarily have not changed, because we're taking 10 years of data in between the time frame that I've given it, which is basically today through the end of October. And so what we're really looking at is that we are very likely to have reached a very quick bottom, and maybe we're starting the next smaller leg up. So two factors with that seasonality, that moving through October, it continually pointed that we would start to head higher seasonally and then pull back a little bit in October, rise strongly in November, pull back at the beginning of December, and then rise from like the mid-December all the way up. And it's basically, you could kind of almost say, gee, it seems to be forming a 3, 4, 5. So let's see what happens. So I'm presenting that particular count. We still have the other one. They got to run it side by side just for a little while longer. Here's the 100% mark for actually this minute wave. And we're looking for a minute wave 3. Minute wave 3 would be equal to minute wave 1 at 21,243. I'm going to be looking for more than that simply because if this is true, and this actually is wave 1, and this is wave 2, well, then we're going to be looking for something much higher. And in this particular case, we're looking at this level where this third wave would be equal to this third wave at 21,934. More than likely, what we're really kind of looking at here is the 100 and then the 1.618. So this one, I got to change these. See, I try to get my colors coordinated, and they just don't seem to be lining up. In this case, these are these minute degree. I'll even leave that one all the way out there, even though it goes pretty high. Okay, got my degrees right. And then this guy needs to be, it is, I believe, extension 1. Nope, not there. And we're going to go underneath it to extensions 2. Yeah, and this one needs to be in this color. Sorry, I always think I get this done, and then it doesn't. So my apologies. All right. So it's actually for the minuet 3. So if we're going 1 to 2, what minuet 3 could look like. 100% is 21,934. And I'd be looking for more. So again, for this or this, we were actually kind of looking up here. For this internal one, I think I can get the 3 maybe up into here, and then a 4, and then a 5, and the 5 should follow then through. Or maybe we get wave 3 completing at 22,896. That would be the minute. So under this particular count, this is a minor 5th wave. It's going to consist of 5 waves of minute degree. We have 1, 2, 3, kind of finishing up here. A 4 and a 5, I could fill it in, but I just need the 4 to really do it well. I can go one more down, and let me put that up there actually. So let me go out to the daily chart for this one, and I am going to go, where am I? I had it before. Things just kind of roll out of my head real fast. I'm going to go here to here. That one's there. And not necessarily, oh yeah, got to go out to the weekly for that one. I'm going to catch, so I want this additional one. So I go, and it's a 4, so I go from here to, oops, bear with me. I'm going to put on the extensions for 4th wave into the 5th. Haven't done it in a while. All right, so now let me pull this back down to the 4-hour chart, open it up. So again, now we have these 618, where is that? Too low. So this one and this one are out, and we're here and here. And these are both in the correct color. That's the minor. So that's not going to work. We definitely would be looking for like 23,000 to finish the minor 5. Now, where we have, I got to go out again because I lost all of them. Oh yeah, for the intermediate third, it's a little bit more difficult because the intermediate wave 1 was kind of small in relationship to the 3. So we're going to rely on a different means to get up that high and rely on what we have in front of us being here. 23,000 for primary, long day, for minor wave 5. That would be an initial right now. That'll, of course, change as this whole sequence continues to come in motion. But under this particular count to where we are, I'm saying that if this is 4, this would be minute 1, minute 2. We're in a minute wave 3, of which we've done minuet wave 1. possibly minuet wave 2. Now, let me take it down to the hourly chart. I briefly have to go over this because if I leave it all up there, it gets way too crowded in terms of all these different fib levels. So I'm going to put it up there, read it out. You can write it down or just come back to this portion. So if we're in this minuet wave 2 still, you can tell we came down to the 236. That's absolutely base minimum. And normally we kind of look for, a 382 or even a little bit further below. Having said that, I can go in there and I'm just going to tighten this up a little bit, get rid of that to 236. And it is in this color, 382 and 0.5618. I really don't think it's going to go that far. So we're just going to go to here because you can see. Now, what else could this be? This is just relating to this chart that what we've done is come down in A of 2. We're doing a B of 2, and that could even take us up further because then we got to go run these coming back up and then to see what we would have to come down. I can do that again. So, but if we're looking here, this wave 2618, got to get rid of it. Doesn't work. So what I try to do is keep the chart as clean as I can as far as Fibonacci goes and what it's related to. So this is always going to be for the minuet degree, and this is minuet 2 because that's what we're working, possibly. If it's done, it did meet the absolute bare bone minimum. We could put a 2 there if we had to. And if that's the case, like I marked it there, then we're looking for the next rally to at least 2190, 21,934 to 23,000. That would just be for wave 3. Then we come down in a wave 4, and we come back up in a wave 5 to complete the minute wave 3. Wow. So if we can get up that high in a minuet wave 3, 4, 5, yeah. You can see that suddenly upside really expands. And what also that would suggest is like we started to see things start to shift with the release of everything that was sitting at 5750 in the S&P and its equivalent levels in the NASDAQ and in the spiders and in the Qs. So for the Qs, it really started to release last week, Friday. And so the call wall got put up to 500. The call wall remains at 500, even coming out of it all today. So in that respect, we're just making some adjustments here within the NASDAQ. And we have, I believe, an equivalent of where the call wall would be is at this high. And so tried it before, broke it, and didn't break it, came flying down instead. Now maybe it'll give it on the way back up. Again, breaking, I believe, opens the door, gives full permission for that, again, building up of, excuse me, the risk on trade. And a lot of that could be towards the next expiration. A lot of that could be towards the October expiration or building into year end. So in any case, that would be a trigger point. Right now, the volatility trigger remains below the market. And so if we start to break down, then obviously then it's going to be risk off and we can start to kind of go pretty hard. But it's below far enough where it should not be affected even if it comes down and fills these levels in terms of this small wave 2. That's under this count. Under the other count, believe it or not, it didn't come down far enough to really start to break the chances that we won't go back up. So, but it does leave a problem area right in here as to what all of this is. I'm going to leave it as a very strange and nasty 5 and see what kind of comes out. And truly, if I go on everything together, either we have one more little pop and we get above 22,523. And I believe, though, we have additional levels up here on 20,700 in between these two markers here. And then that would possibly complete either wave one or the B wave, right? And so both still fit, even with all the activity that took place today in just rolling things out. It still fits that we could have a B wave and a sudden just slide down and then another intense rally going into year end. So we still have seasonally these markers that tell us that, like, well, this is likely what's going to happen, but in between we could get this really quick, swift drop. And what could kick it in, or all kinds of things can kick it in, but the possibility that it can happen remains in the market. I think until we start to break higher and really get rid of the risk off threat, and that the volatility trigger either kind of stays at a level that continues to cushion moving higher. So risk on is going to produce an up market. The futures get purchased, the underlying stocks get purchased due to the options that are trading. And so risk on is that you're selling the VIX, taking that cash and going in and buying the underlying or the component volatility within these indexes. So when that happens, say it's an Apple, well, then Apple goes up because they're buying the call, and they're buying the call, so the dealer has to sell the call and buy the stock. So it's almost a self-fulfilling prophecy as far as how options trade. So, but they do it large enough that they get a much bigger move. And it happens not just in Apple, but it happens in AMAT and Amazon and in Broadcom and just across the board. So that would be the upside. We're leaving open the potential either that this small wave 2 is not done. Therefore, we have additional, it came down to support, 0.236. We have additional support at 19,786 and 19,553, plus or minus. You can figure that out. If those levels hold and we start to move up again, then it's quite easily could be a wave 2. And then we're going to start heading up to put in wave 3. And under the other count, if we break and come down into here, I wouldn't expect it to come down. I would expect it to come down and break. So that still kind of is out there with that possibility. And this could be 1, 2, 3, 4. I don't know. We got all this overlap. It's not very good. So it has to be an ABC, one, A, B, and a C wave down, and as ugly can be. And then this is the start of either the next rally, or it's A and we're going to do a B and then we're going to come down into C. And at that point, again, exactly what it is to be determined, but I would leave it up to the wave 2. So I think that I'm giving a little bit more credibility to this one and leaving the other now open. And we didn't break any rules on either one of them in either direction. So they're both still valid. All right. Now, just let me go up to the daily. We'll take a look at the moving averages. They actually, see how nicely in alignment they remain for upside. Right? The daily remains very primed to go up. There is the 8, there is the 20, there is the 50, there is the 200. And all still doing very well. And this was today. So pre-market, or just after, we came down to 20,056. And then by the end of the day, we ended up back at the highs. So interesting day, and we shall see. Over in the S&P. This one, I also did the shift to show what this one looks like. Yeah, let me just kind of see if I can get this. I want to just show this a little bit cleaner there. That's what I want to see. So here again, wave 4 complete. Wave 1, wave 2. And then I've switched a little bit on this internal. I don't know, let's just show you. where I kind of came in 1, 2, 3, 4, 5, 1, 2, 1, 2. Instead of 1, 2, 3, 4, 5, wave one, and this is wave two. Still could be this also bare minimum. But I'm looking at it this way to kind of improve where wave three can come and this wave three can come. And both of these, this is what I'm going to find interesting here for the S&P. The call wall, I believe, is going to show up now. In fact, let me just see for a second what it looks like. They're still showing the call wall down below. And so I think by tomorrow, we will actually, they're still showing it. So I'm not actually going to go over those levels other than to say that the call wall, I believe, or where the collar for JP Morgan got put is 6020, December 31st. So the December 31st 6020 call is where you will find the 39,000 collar that got put on today by JP Morgan, and the puts are at 54.25. December 31st, 54.25 on the put side. So with that being 6020, before we get very far into this, we're going to be pressing on 1620 maybe. If we go full bore on this, just a smaller third, we're looking at 60.79. And I'm looking at ultimately for possibly just this minute three. Again, it could be right here, but these then get really out of line. They really do. I mean, I can go up to the 4-hour chart and open it up this way, and they just get out of line because of the size of this. So again, it fits, but it doesn't fit unless there's going to be some adjustments made to this call. So I have to keep alive the potential that we do come up in the irregular. So then that reverses this back out. And so just this is 3, A of 4, B of 4, and then it comes down. Now, what went against that and made me want to change this is how hard this rallied. Once it was done and everything was released by the market in terms of this is all now done, they just started buying it. And they actually bought it back to what now is standing as the call wall. And that is 58. Actually, it's 5806. And where did we close? 5803. And now we're open again at 5803. So again, and it got as high as 5823 before it kind of slid back into the bell. So it's interesting. It's very interesting. And so we shall see how this all works out. Again, within this smaller size move up here, as a 1-2, this could be A, this could be B, and we come back down in a C wave. In that case, you're going to want to run these. And I'm going to add the drawing, and they're just going to be straight retracements. And so you can see right here, if we're going to come back down, they're not. Sorry about that. Whew. Again, long day. So we're going to have to come here. We go like that. We go like that. We go like that. The C wave could come bring it 5,700. Oh boy. So, but 57.46 where C will equal A. That could work a little bit below. And it would put in a slight new low below the A wave. So that could work. So these are the possibilities. And I know it's really still very confusing, but we just have to let this all settle out and then see what comes through. This is why I'm presenting this, because it does appear that they're just jumping straight right back into the risk-on trade and just kind of getting that all set up. And so That's how I'm labeling it. And then a break above, and let me just see, because where they are calling this call wall for the ES, it's really 5805, and then the SPX is still 5750, and that's this afternoon's run. So I am going to leave that for now and see what the adjustment shows once tomorrow gets run and everything is settled out. So 1, 2, 1, 2, we're up into a third, and it really does fit because it just kind of gave a good launch. Now they're starting to bring it off, so we got to leave a lot of possibilities open within there. The other count still there, and because we didn't break above there, this still could be an ugly, I'm not sure what I'm going to call it, because you got that against that and against a whole bunch of stuff. So either we still can turn and just drop precipitously, and in that way we would drop all the way back to here, because this would then be A and this would then be B, slightly irregular, and the 1.618, folks, actually comes in down here below that. Don't know what the catalyst would be at this point, so we shall see. But right now I'm leaving it that it's 1, 2, 1, 2, 1, 2. That means it's very striking, strong third wave up is what this means, right? Because it's subdividing twice. And the third on this projects to here, 62.99, 1.618 for this third. So, but the way that they've got the what I think where they put their collar on, I'm thinking, okay, maybe their analysis is a little bit different and not really showing that it's going to go too far above the additional level. And I'll put it back on so we can see it. And that's going to be this. And I'm just sticking the irregular back on there. And I'm going to take all of that off and then put the balance on. 236 and 382 in a minute degree. And there they sit. So we still can get to 59.19 to 59.75. Oh, excuse me, to 6,008. Or up here. And that still would just be an irregular. Now they're at 6,020. If they can get up to 8, okay, they're going to go knock on the door. I don't think they're going to get too worried about it. And then we come flying back down and end up down here. They'll be just fine. So maybe the decline really goes contra to what the seasonality is saying. Since already discussing seasonality, I was telling you that really we were looking for a September low. And instead of this particular cycle finishing maybe at the beginning of September at this low, and instead of pushing out to that window was the end of September to the first week of October. So, it would be amazing if it dropped out of the sky now and by Friday was sitting down here. I'm not sure what would drive it. I really am not. But that, to me, if it's going to fit that seasonal chart or that seasonal cycle. Otherwise, I would think that the cycle may have come in early, and in which case we're in an upcycle, and we still could come down within the new cycle and then start to rally again in November. So we could still drop under the other if this was not. Again, I'm reversing it. The 3 stays the same, but this becomes A, and this becomes B of the 4. And we're going to come down hard in the C. That's still alive, and there are the irregulars. So we've not really broken them, but I'm just taking them off because they get too many. If you're just looking at my chart, you're like, now, what were those? What were those? And I would have to agree. Okay, I'm not going to go into too much more detail here because we got to see what the market wants to do. But upside could get strong. That's the one thing. And again, we could walk in tomorrow the same way we came in here. And they just really bought it hard. Or here actually is where they did it. They bought it hard and then they dropped it. They buy it hard and then they drop it. Maybe. All right. So if you remember that, we walked in on a Monday because it happened overnight. And the high was actually 15 minutes before the opening on Monday. And then we just dropped. And that was the 26th, so last Thursday. We opened at 58.30 and went down from there. Opened at 58.26, hit 58.30 and went down from there. And that's at 6 a.m. So, or my time, 6 a.m. So before the opening. All right. Let's take a look at the moving averages out on the daily chart. They're also still pretty nicely lined up for the market to go up. Everybody recovered from, getting slightly flat. So that all stays in line. So again, day by day. That's all I got to say. That's how I'm taking it day by day. Tomorrow, pre-market, we do have S&P final U.S. manufacturing PMI. We have the ISM manufacturing PMI, construction, 945 S&P final U.S. manufacturing PMI, 10 a.m. ISM, 10 a.m. also construction spending and job openings. So this week we'll be getting all the employment data, topping it off on Friday with the U.S. non-farm payroll and U.S. unemployment rate. And that, if anything, is what I think now the market's going to focus on. So we'll see what kind of goes on in between all of that. Next update will be on Tuesday, October the 1st.